By 2028, online payment fraud is projected to reach $362 billion globally. This staggering financial exposure represents just one vector in a rapidly expanding matrix of corporate threats. This massive risk exposure is driven by increasingly complex business models. The pressure is compounded by strict regulatory mandates, from rigorous environmental, social, and governance reporting to intricate data privacy laws spanning multiple jurisdictions. This diagram outlines the risk universe, a comprehensive map of potential threats that chief audit executives must navigate. Organizations face a multiplying array of operational vulnerabilities, financial exposures, strategic misalignments, and regulatory compliance nodes. Each branch requires specific controls to protect the entity. This topography is highly dynamic. As daily transaction volumes explode and reliance on third-party software architectures deepens, these risk variables mutate continuously. We are looking at a high-velocity threat environment. The scale and speed of this landscape have outgrown the legacy frameworks designed to oversee it. The disparity becomes clear when we turn our attention from the external threats to the internal methodologies used to assess them. This vintage ledger shows the analog foundation of traditional audits. We are mapping a hyper-modern digital environment using static workflows designed for physical paper trails. The legacy process dominating many organizations relies on manual, sample-based testing. It involves physical tick marks to denote performed procedures, extensive manual cross-referencing between work papers, and periodic backward-looking reporting. The professional standard auditors must achieve is reasonable assurance, a high level of confidence that financial statements or internal controls are free from material misstatement. But under the weight of modern big data, achieving that assurance manually is mathematically impossible. Attempting to provide reasonable assurance over an exponentially expanding risk universe with manual, sample-based tools guarantees dangerous residual risk. During fieldwork execution, modern audit departments are caught in a severe squeeze between two compounding pressures. The first pressure is rising statutory complexity. Evaluating intricate third-party software dependencies and ensuring compliance within multi-layered regulatory environments requires an exhaustive review of controls. The second pressure is the relentless explosion of enterprise transaction data generated every single day across global operations. Confronted with these dual pressures, traditional manual fieldwork techniques, such as physical observation and reading individual documents, become inherently inefficient. As systemic complexity and data volumes scale simultaneously, the foundational mathematics behind traditional audit sampling begin to break down. To test the mathematical limits of manual sampling, we can look at a scenario based on the XYZ Bank case study. This visual equation lays out the raw dataset parameters. The bank has 15 million customers. For compliance, each customer requires 5 separate Know Your Customer documents. That calculation results in a macro population of 75 million distinct records requiring audit verification. The traditional methodology applied to this scenario dictates using judgmental, interval, or dollar unit sampling to select a tiny fraction of the data for review. Here we see the stark visual math of manual sampling limits. Extracting a standard sample size of 100 records reveals nearly 75 million untested data points. The statistical failure lies in extrapolation. Deviation rate logic calculated from tiny samples cannot capture anomalies hidden within massive datasets. When applying this to tests of controls, passing a test on those 100 records gives management a false sense of security regarding the operating effectiveness of the remaining 74.9 million instances. When applying this to substantive procedures, the gaps between interval samples are so large that material monetary misstatements can easily slip through undetected. When an auditor evaluates 75 million records using a sample of 100, the manual sampling generates evidence that answers the wrong question for the scale of the assertion being made. Beyond the sheer volume of data, the methodology also struggles with the dimension of time within the audit lifecycle. This timeline illustrates that traditional auditing is point in time. It is bound tightly to rigid fiscal reporting periods rather than adapting to actual operational risk. For example, manual tests of controls are typically executed at discrete interim points, such as month 6 and month 9. This leaves a dangerous, untested gap between month 9 and month 12. While ISA 330.12 explicitly requires obtaining evidence about the operating effectiveness of controls during that remaining period, manual constraints often leave this gap exposed. Corrective actions face similar delays. According to ISACA standards, follow-up audits to verify if failed controls have been fixed require operational seasoning time to prove long-term effectiveness. This periodic methodology creates severe temporal blind spots. Failed internal controls operate unchecked for months before the next audit cycle is scheduled to catch them. Closing these mathematical and temporal gaps requires a structural shift. The profession must move past sampling and analyze the total population. This animation demonstrates continuous, automated auditing. Driven by advanced internal audit software and data analytics platforms, the constraints of manual extraction disappear. This technology enables whole population testing. Auditors can evaluate every single transaction within a dataset for deviations from established policy, completely removing sampling risk. Compare this modern output with legacy fieldwork. Physical tick marks and manual cross-referencing are replaced by streamlined data intelligence, anomaly alerts, and automated risk scoring. Automated continuous monitoring solves the temporal lag by evaluating controls in real time, 365 days a year, closing the gap between interim testing and fiscal year-end. Continuous auditing replaces vulnerable point-in-time checks with dynamic, real-time, reasonable assurance. This transition directly impacts the daily role of the internal audit professional. By automating repetitive testing routines and digitalizing evidence gathering, auditors are freed from the manual grind of catching and recording procedural work. This elevates the profession. Auditors transition into strategic partners, dedicating their time to high-level anomaly investigation, root cause analysis, and proactive risk management. To adequately map and protect the modern, expanding risk universe, the methodology must finally match the scale and velocity of the threat. The transition from manual sampling to continuous automated auditing is a current operational requirement. How is your organization adapting its methodology to these high-velocity threats?